Friends, we will start with a new topic, that is wealth tax. Before I get into the topic, let me explain the relevance of this particular topic from the examination point of view. This is a definite topic and about 15 marks you can easily score from this particular topic. And this topic, how we are going to discuss. Basically, the questions are based on whether the student know what constitutes the wealth. In the wealth, we have got only 6 assets. So with respect to those 6 assets, you should have the clarity. That is, what are those 6 assets? Much more important is, what are the exceptions? Under each of the asset, again, exceptional situations are there. So in the wealth tax, what is most crucial from the examination point of view is whether student clearly got the understanding. More than the understanding, will he be able to remember and reproduce? So according to me, there are about 30 exceptions. Although they are being brought in the definition of the asset, still exclusions are there. So we should try to learn that part. And then, of course, we are going to almost revise our clubbing provisions, which we studied in the topic of income tax. Almost we are going to make a revision here also in the form of a deemed assets. And then we have got exempted assets. See, what is the distinction between what I explained just now and what is the exempted asset? Yes, when I say exclusion, exclusion in all circumstances. When I say exempted, exempted in certain situations and in case of certain assessees. Then, if you are borrowing the money, you incurred a debt to acquire an asset which is included in the wealth tax, in the wealth which is subjected to the wealth tax, then that debt is allowed to be reduced. Then, if you are incurring debts in respect of the wealth which is situated outside India, and if you happens to be a non-resident, because your Indian wealth is only going to be taxed, then that debt which you incurred outside India will not be allowed to be reduced. For that matter, you may incur debt to acquire the asset, but that asset is not included in the wealth because it is out of the definition of the assets. Because basically we have got only 6 assets. So like that, one should know what all the assets are to be included in the wealth. What is this concept of deemed wealth? What is this exempted assets? And then we should know which debts are allowed to be reduced and which debts are not allowed to be reduced. Basically, this is the core part of the first part of our discussion. Then the part B discussion is on valuation. See, in your CA course, I personally feel 2 aspects, I don't say are difficult, but definitely cumbersome. Like under the income tax law, salaries head is there. Valuation of perquisites is one thing. It's not that student will not be able to understand. The problem is with respect to the how do you memorize and reproduce. So also in the topic of wealth tax, after this core discussion gets completed in the part 1, in the part 2, what is waiting for us is the valuation of the assets. And then at the end we should also discuss the assessment procedures under the wealth tax. Of course, our discussion is only going to be confined to only special assessment requirements under the wealth tax. Other way around, wealth tax assessment requirements and the income tax, so many common features are there. Then we should also study the liability in special circumstances. Let us suppose there is a company. What is the liability of directors, liquidators? Like that, we are going to conclude this particular topic conceptually, and then of course the last session we need to do, of course about 50 to 60 questions are there. To the extent possible, we will try to cover at least 50% of that target, because the students who are sitting in the live class already gave the targeted time for this. They have allowed minimum 8 hours, maximum 9 hours you have to finish off this particular topic, sir. So taking the time into consideration, without losing the quality, without sacrificing the purpose or the utility of it, we will do this particular exercise of discussion on wealth tax. So now to start with, any tax law, when we start, what is most important is understanding the charging section. Under the wealth tax law, what is the charging section? It is section 3, discuss about the charge of the wealth tax. See, if I read this particular section, how it is. Wealth tax shall be charged for every assessment year in respect of the net wealth on the corresponding valuation date of every individual, Hindu undivided family, company, at the rate of 1% of the amount by which net wealth exceeds 30 lakhs. So for the exam which you are preparing for the May or the November of 2012, what is the valuation date? Valuation date happens to be 31/3/2012. Assessment year is 12 and 13. So once you look at the charging section, 3 to 4 things are clear. What is the percentage of tax? 1%. And that too also, what is it? Wealth in excess of 30 lakhs. And then this wealth not for the entire year, unlike the income for the whole previous year. Under the wealth tax law, the wealth as on the valuation date, as on the last moment of the valuation date, is something which you need to remember. And then charging section gives that this particular wealth tax is applicable only for 3 persons. Who are they? Individuals, Hindu undivided families, and companies. This is how the charging section is. Of course, again we need to understand, when I say individual, who is an individual? Because an AOP, association of persons, sometimes will be considered and treated as an individual. Under what circumstances? And which are specific exclusions to whom this particular act is not applicable. That is all being given in section 45. And section 45 says, A company registered under section 25 of the Companies Act. Non-profit companies. Any cooperative society, social club, political party, mutual fund established under, specified under section 1023D of the Income Tax Act. These 5 are being specifically excluded. Of course, in this context, let me tell you, in case of the partnership firm, what we say, partnership firm is not a taxable entity under the wealth tax law. So in case of the partnership firm, what you do? First calculate the net wealth. First calculate the net wealth as if it is a taxable entity. Later on, that net wealth, how do you distribute among the partners? To the extent of their capitals, you have to give that net wealth. In excess of the capital, any wealth is there that must be apportioned in proportion of the dissolution ratio or in a profit sharing ratio is a point. So this is with respect to the partnership firm. So first 2 things, please make note of. Section 3, charge of wealth tax. Section 3, charge of wealth tax. What are the points to be remembered? You write. Number 1, net wealth in excess of 30 lakhs. Net wealth in excess of 30 lakhs would be taxable. Would be taxable. Point number 2, rate of tax. Rate of tax 1%. Number 3, net wealth as on the last moment of valuation date. Valuation date shall be considered. Shall be considered. Example, for the previous year of 11 and 12, for the previous year of 11 and 12, valuation date is 31/3/2012. 31/3/2012. Then under the wealth tax law, assessable persons are A, individual, B, HUF, Hindu undivided family, C, company. C, company. Note, trust is assessable as an individual. Trust is assessable as an individual. Then friends, all this is being stated by whom? section 3. So, charge of wealth tax is being dealt by section 3. So, on the top of all these points you write section 3, charge of wealth tax. One most important thing under the wealth tax, how it differs from the income tax. In the income tax you have got the concept of surcharge and educational cess, whereas under the wealth tax there is no surcharge and educational cess. Please write down. There is no surcharge and educational cess. There is no surcharge and educational cess on wealth tax. On wealth tax. Then we have to see specific exclusions. Which SSEs are being specifically excluded from the purview of wealth tax? Section 45. Write down section 45. No wealth tax shall be levied. No wealth tax shall be levied in the following situations, or in case of the following SSEs. A, company registered under section 25 of the Companies Act. A, company registered under section 25 of the Companies Act. B, cooperative society. Cooperative society. C, social club. Social club. D, any political party. Any political party. E, any mutual fund. Any mutual fund specified under section 1023D. 1023D of Income Tax Act. 1023D of Income Tax Act. Now friends, now you are with understanding of the point of who is an SSE for the purpose of wealth tax and what is the percentage of a tax and what is the basic exemption limit. These things we got the clarity. So now naturally you should know what is net wealth. How do you compute the net wealth? It's a 4-step mechanism. First you have to aggregate the value of all the assets. Then you should add the deemed assets. From there you should reduce the exempted assets. Later on you should reduce the debts incurred for the purpose of acquiring those assets which are being included in the net wealth. Write down computation of net wealth. Computation of net wealth. Aggregate value of all assets. Aggregate value of all the assets as on the valuation date. As on the valuation date. Add deemed assets hyphen section 4. Less exempted assets. Exempted assets section 5. less debts incurred, less debts incurred in relation to assets included in the net wealth, assets included in the net wealth. So that is how you are going to find out the net wealth. So this naturally gives rise to a point of understanding what is an asset. Of course, a point before we get into the definition of the asset is an example here we are discussing to make you to understand the relevance of the valuation date. Friends, gold of the SSE is confiscated by the customs department. Let us suppose such a confiscation happens on 29/3/2012, situation 1, situation 2 on 31/3/2012, situation 4, 2/4/2012. Will it be included in the wealth of the SSE or not is the total discussion point here. See, in case if confiscation is happening on 29/3/2012, as on 31/3/2012, SSE is not the owner of such confiscated goods. With confiscation, he is losing the ownership. Seizure differs from confiscation. In case of the seizure, either by the income tax or wealth tax authorities, ownership is not getting transferred. Once the confiscation happens, the ownership, the SSE is losing. Now, 31/3 confiscation happened. Will it be included? The answer is no, because 31/3/2012 definitely is a valuation date, but only in respect of those assets which are held by the SSE as on the valuation date till the last moment of the valuation date. So once they are confiscating as on 31/3/2012, then that also should not be included. And in case if the confiscation is happening on 2/4/2012, yes, as on 31/3/2012, what is the valuation date? SSE is the owner, so it is to be included as a point. So to this detail you should be clear with. Already I explained the point that in case of the seizure, it is not that the SSE is going to lose his ownership. So consequently, in all these three situations, if it is a seizure, then the value of this particular asset is to be included in the, what is it, your net wealth. Now, having got the understanding of the relevance of the valuation date, now I move to the definition of the asset which is given in 2 clause EA. You should understand the point that under the wealth tax law, there are only 6 assets, and moreover you should also understand one more thing, just for you to remember. This is what we are saying. Generally under the wealth tax law, if any asset is excluded, what is the purpose or the reason behind it? What is the purpose or the reason behind it? Generally, wealth tax is not levied on productive assets. If they are going to generate the income, on that we are not trying to levy the wealth tax. So that is the reason why investment in shares, mutual funds, bank balances, these are not chargeable under the wealth tax. Of course, a detailed discussion we need to make, but overall you should understand only 6 assets are being stated under the wealth tax law as assets which are to be included under the net wealth. First we will make a note of these assets, then we will try to discuss one after the other. As I already explained, what is most important is not understanding what constitutes an asset. What is most important is remembering what does not constitute the assets. So write down, friends. Definition of asset under section 2EA. Definition of asset under section 2EA. Under the wealth tax law, only 6 assets are considered for inclusion under the wealth. A or number 1, any building or land appurtenant thereto. Any building or land appurtenant thereto. Number 2, motor cars. Number 3, jewelry, bullion. Number 3, jewelry, bullion. Number 4, hatchets, boats, and aircrafts. Hatchets, boats, and aircrafts. 5, urban land. 5, urban land. 6, cash in hand. 6, cash in hand. So friends, only these 6 assets. That is the reason why your plant and machinery, investments, bank balance, these are not to be included as a point. Similarly, your furniture. If you look at your balance sheet, friends, generally you should know what will be there on the asset side. What will be there on the asset side? Land, buildings, and then plant and machinery, furniture, motor car, intangible assets, then investments, then current assets, then miscellaneous expenditure not at written off and P&L debit balance. In this, what we are saying, except for your land and building, all other things in the fixed assets are being excluded. Of course, one more thing that is there in the fixed assets is the motor car. So land and building and motor car in the fixed assets. Investments, no, it's not part of your asset. Current assets, no. Miscellaneous expenditure not at a written off and P&L debit balance, no. So in a business balance sheet, what is it? Only the land and building and the motor cars. Other than that, all other assets are being excluded. See, all this discussion is only to make you to remember, not make you to understand, because there is nothing great to understand here. Now, in this context, Let us start with one after the other. When we say land and a building, what are the specific exclusions also one should be very clear. See, when we say your buildings, in case if the building is used for the commercial purpose, still it will be included, except in a situation if it is held as a stock in trade. For a construction contractor, buildings he will be having and they will be his stock in trade. If that is the case, if the buildings are held as a stock in trade, it should not be included. Similarly, if that building is used for the purpose of the business carried on by the SSC, then also it will not be included as a point. Of course, at a later point of time we will be studying the point that when we say being used for the business or profession carried on by the SSC is not just confined to solo use. Even if he is going to use that particular building along with others, that is Chakravarti is having a building and this building is used by the partnership firm Y Chakravarti Associates, then this is not going to be included in the net wealth, which is going to be taxable, because he is using for his business along with others. So stock in trade and the building used for the business or profession shall not be included in the net wealth. Then point is, there is a house meant for the commercial purpose, but that is kept vacant, lying vacant, then for the purpose of the Wealth Tax Act it is an asset. Then in case if that house is meant for residential purpose, of course whether it is a commercial purpose or residential purpose, how do we know, sir? How do we know? You have to ascertain the same from the government records, that is municipal corporation records. We will make a note of whether the property is for the residential purpose or for the commercial purpose. Now if the property is of a residential property, what the law says here? See, there is a company, it has got house property, it is being used for the residential purpose, it is being let out to the employees. If it is let out to an employee whose salary, gross annual salary is less than 5 lakhs, then what we said, such a residential house you should not include. If you are letting out that property to your employee whose salary is more than 5 lakhs, then it will be included as a point. Similarly, if that residential purpose, whatever the property is there, if it is held as a stock in trade, just like commercial property, if it held as a stock in trade, how you are excluding it, even the residential purpose property also, if it is held as a stock in trade, it also should not be included in the net wealth. Similarly, if a residential property is there, if it is let out for a period of more than 300 days, that is 300 days or more than 300 days, then also it will not be included. Earlier when I started this discussion, I told, generally under the wealth tax, assets which are used for a productive purpose, income generating productive purpose, they are not included in the wealth tax. Government is encouraging people with wealth to construct the houses and let it out to the people for more than 300 or more than 300 days. Because what is the objective behind this? Shelter for all. Who should provide the shelter? Government should provide the shelter. Now that is being outsourced to the general public. So general public, when they will get motivation to construct more houses, only when you say that is not going to be included in your net wealth, construct it and let it out for 300 or more than 300 days in a year, then it will not be included in your net wealth. That means आप मकान construct करके, in case if you are staying in that, that means we have to include the same in your wealth. If you are carrying some business in that, it is a commercial property, it is not included. If it is held as a stock in trade, it will not be included. Similarly, guest house is also an asset. As far as the farmhouse is concerned, friends, if it is located within 25 kilometers from the local limits of the municipality, then such a farmhouse shall be treated as an asset. So advise your clients to construct the farmhouses 25 kilometers away from the local municipal limits, so that what will happen, on one side you are pollution free, on the other side it is not going to be included in the net wealth. Then these are the things which you should remember with respect to the building. Write down, friends. Building or land appurtenant thereto. Make a side heading, building or land appurtenant thereto. Point number 1. Commercial property. Commercial property is an asset. Commercial property is an asset, except A, if it is held as a stock in trade. If it is held as a stock in trade. B, if it is used for the purpose of business or profession, carried on by the SSC, either alone or along with others, brackets, partnership firm, where the SSC is a partner. Partnership firm where the SSC is a partner. Then what is a noteworthy point here is, there is a commercial property, it is lying vacant, then it shall be treated as an asset, except in a situation where the commercial property is held as a stock in trade or commercial property is used for the purpose of the business or the profession. In all situations, commercial property of land and, that is building and land appurtenant thereto, will become an asset. Then number 2, residential property. Residential property is an asset except in the following situations. Except in the following situations. Number 1, it is allotted by the company. It is allotted by the company to its employee, to its employee, oblique officer, oblique director, oblique director, who is in whole-time employment, who is in whole-time employment, and whose gross annual salary is less than 5 lakhs, whose gross annual salary is less than 5 lakhs. Then the next issue is, if it is held as a stock in trade, if it is held as a stock in trade, then third is, if it is let out for 300 days or more, 300 days or more, then fourth, if it is used for the purpose of, business or profession, if it is used for the purpose of business or profession, carried on by the SSC, either alone or along with others, either alone or along with others. Next, friends, third type of house property is what? A guest house. Write down, side heading, guest house is an asset. Guest house is an asset, irrespective of location, because this 25 kilometers and all is only for the farmhouse, not for the guest house. Then fourth, or the next type of house property is the farmhouse. Farmhouse is an asset. Farmhouse is an asset if it is situated within 25 kilometers from, local limits of municipality, any municipality. Then friends, I move to the next issue. What is it? Second asset I am coming into, motor car. Here you should have the clarity as to what constitutes a motor car. What constitutes a motor car? Much more important is which type of motor cars are not included. But for that explanation, a layman understanding could be bus, lorry. These are also called as motor cars. But under the wealth tax law, bus, motor cars are not to be treated as motor car. And important thing is, in case if the SSC is carrying on the business of running the motor cars on hire, then such motor cars are not going to be included. Similarly, if he is a dealer of the motor car, then the motor cars are held as a stock in trade, then that also will not be included. So these are the important things. And even if the motor car is what is it, Desi or Videshi, that is local or imported, it constitutes an asset. See, there is a leasing company and motor cars are leased out by that particular leasing company. Still it constitutes, what is it, an asset for the leasing company, because leasing company as such is not using them for running them on hire. Just it leases out that particular motor car. So it's a capital asset. So in case of the hire purchase situation, ownership gets transferred at the end of the, what is it, last payment of the installment. But still the law says the moment agreement is entered, substance over the legal form of the transaction, and hire purchaser will be the owner of such a, what is it, asset, and in his net wealth it will be included as a point. So these are the things. Bus and trucks are not motor cars. Jeep and Jonga constitutes motor car. Delivery vans, हम रिटेल ट्रेड में हैं, तो डिलीवरी वैन्स में हमारा गुड्स डिलीवर हो रहा, राइट. डिलीवरी वैन्स का ये मतलब नहीं जिसमें डिलीवरीज होगा नहीं, डिलीवरीज ऑफ व्हाट, डिलीवरीज ऑफ द गुड्स, not human beings. Then two-wheelers and three-wheelers are not motor cars. Two-wheelers and three-wheelers. What is three-wheeler? Auto, rickshaw. Thanks to the law maker. Otherwise, our rickshaw, auto rickshaw walas need to show the auto rickshaws in their net wealth. Of course, since they are using for their business or profession, it's excluded otherwise. Display vans, tractors, lorries are also not motor cars. So beautifully presented to make us to understand what really constitutes a motor car. Write down, friends. As I already told one thing right at the beginning, remembering those 6 assets is not a very big issue. Remembering the exceptions is a very big task. At the end of my explanation of 6 assets, we will play with a question where 30 to 32 items I will be asking, and you should be able to tell whether it is asset or not asset. Not only saying asset or not asset, what is the reason for it? Now the point, so carefully listen. So motor car, write down. Motor cars is an asset exceptions where motor cars are not assets. A, if such motor cars are used in the business of running them on hire, if such motor cars are used in the business of running them on hire, then friends, if motor cars are held as a stock in trade, if motor cars are held as a stock in trade, then buses, trucks, delivery vans, ambulances, display vans, tractors, lorries, comma two-wheelers, comma three-wheelers are not motor cars, are not motor cars. Note, Jeep and Jonga, Jeep and Jonga constitutes motor car, constitutes motor car. Next, note 2. Motor cars leased out by the leasing company, motor cars leased out by the leasing company constitute asset in the hands of leasing company, constitute asset in the hands of leasing company. Then in case of hire purchase, in case of hire purchase, motor car shall be included in the net wealth of purchaser. Motor car shall be included in the net wealth of the purchaser. Then I am moving to the third asset, friend. What is it? Jewelry, bullion. So write down jewelry, next asset, jewelry, bullion, comma furniture, comma utensils, or any other article, or any other article made wholly or partly, made wholly or partly of gold, comma silver, etc. What is that etc.? Precious metals. Friends, here also what will not constitute jewelry is, if such a jewelry or bullion is held as a stock in trade, it should be excluded. Similarly, gold deposit bonds are not to be construed as, what is it, your jewelry. So exceptions are exclusions. Exclusion, jewelry comma bullion held as stock in trade, jewelry comma bullion held as stock in trade. Then the fourth asset, friends. What is the fourth asset? Assets, fourth asset, assets, comma boats and aircrafts. Of course, friends, exception is what? Exception is what? If this asset or boat or aircraft is used for commercial purpose. Aircraft is there, it is being used by the directors to move from one place to other place for their business purpose. That's a commercial purpose. Of course, whether aircraft is a commercial vehicle or not, how do you know? By looking at the license given by the concerned ministry or the authority, that is a Ministry of Civil Aviation. So most important thing is, in case if these are used by the SSC for commercial purpose, they are not to be treated as assets for the purpose of computation of the wealth. So helicopter, aircraft means helicopter is an aircraft, so it is an asset. Ship, Titanic ship, it is not a boat or asset. So ships, therefore are not assets. In case if these assets or boats or aircrafts are held as a stock in trade, then we can say they are used for the commercial purpose, accordingly is not an asset. Who said so? This is the ICAI viewpoints. So write down, friends, that is exception if these are used by the SSE for, if these are used by the SSE for commercial purpose, oblique held as a stock in trade, shall not be treated as assets. And one more point is, ship is neither a boat nor a asset, and therefore not an asset.